All right, I have friends and family members texting me asking what's going on with Bitcoin. So it is probably a good time for your latest piping hot monthly Bitcoin digest. Today we're going to fixate a little bit more on the kind of macroeconomic side of things, which is really what's driving a lot of what we're seeing. Again, for those longtime watchers of this channel, you know that I'm not overly fixated on predicting near-term price movements. One, because that's a fool's errand. And two, I know many of you watching are longer-term hodlers and users of Bitcoin. But it is still nonetheless, I think, important to understand why things happen the way they do, at least to the degree to which we can understand that, because that helps build conviction and also potentially gives clues as to when you might want to stack more sats, perhaps outside or to complement an ongoing dollar cost averaging program, however you are stacking your Bitcoin. It may be tempting to ask, WTF is happening, right? You had Abu Dhabi come out, as we can see, revealing a $460 million Bitcoin purchase for the Sovereign Wealth Fund. You've got MicroStrategy continuing to stack. They are up to now nearly 500,000 Bitcoin. Absolutely crazy. Furthermore, you had the Czech central bank come out and approve at least an assessment to evaluate whether it should put up to 5% of its reserves into Bitcoin. This is a process that will no doubt take some time. But you have all these things happening. And furthermore, you even have a little Sunday Trump pump. I'm recording this on Monday, March 3rd. So yesterday, Trump posted on Truth Social saying, hey, we're going to have these different assets in the US, crypto reserve, including Bitcoin and Ethereum and other things. And lo and behold, all those assets pumped quite a bit. But today, all of that has been reversed. The market said, I literally don't care. And so there's a lot of people probably scratching their heads saying, what on earth is happening? If that wasn't bullish, what possibly is going on? And so over the near term, what is very clear is that macroeconomic stuff is very much in control. It literally did not matter that Trump sent that post on a Sunday evening. And the big elephant in the room is liquidity. Remember that, as we can see, Bitcoin tends to be very directionally correlated with global liquidity. More global liquidity, Bitcoin tends to subsequently do very well. And the reverse is also true. And so we have a number of things negatively impacting liquidity or potential future liquidity that markets are discounting and starting to price in. The big one that everyone's talking about, and maybe the sort of first order kind of observation, is around tariffs. Tomorrow, Tuesday, Trump is set to finalize the levels, I guess, of the tariffs that will be imposed on Canada and Mexico. So this video will come out after that, in which case, who knows what that will do depending on what is announced. But make no mistake, any amount of non-zero tariffs, the concern there is that, well, that's going to reduce imports and therefore reduce the amount of dollars going out into the world that is paying for those goods that are coming in to the US. And the worry is that that will drive the dollar only higher. What's the problem with the high dollar? There's a ton of them. If you're a foreign nation and you need to pay for energy imports into your country with dollars, that's a huge problem if the dollar gets stronger versus your currency, because you can't print the dollar. So that's like your expenses going up. And so what do? You have to raise the funds somehow. So you're going to sell your war chest of US denominated assets, whether that's stocks, whether that's US government treasuries and others, to paper over those cracks. And if we look at the Dixie, the DXY, this is an index of the strength of the US dollar versus other currencies. We can see that it is just about at its strongest at any time over the last 20 years. And if you look at it on a trade weighted basis, it's even higher. It goes back to what was called the Plaza Accord back in the mid 80s. And that was an agreement to sort of forcibly bring the value of the dollar down, to forcibly devalue the dollar, because it was causing so many issues around the world. So that's one huge piece that is weighing on markets, that markets are discounting into, hey, worse liquidity conditions ahead. The other big piece is DOGE, all the kind of government efficiency initiatives of Elon Musk and others. And so while it is certainly the case that private sector can more efficiently use resources than the government, the problem is the sequence of activities. Luke Grahman, for those of you that are not following Luke's work, you absolutely should. It is the most valuable thing I read every single week, is his kind of weekly 10 most interesting things he saw, over that week. But one of the best macro thinkers out there, he's talked a lot about this, that like, hey, DOGE, like reducing government inefficiency, good thing. But if you do it in the wrong order, it could create humongous problems, because with debt levels so high and government spending as such a big component, I think it's 25% of US GDP, that spending, even if it is wasteful, is going to someone or something. And hilariously, as we can see, they're now even, wanting to change the definition of GDP to decouple government spending, to take government spending out of GDP, which, by the way, is in some ways sensible, but it's hilarious. Both sides of the political aisle push for changes in these definitions to suit their needs. And so increasingly, Howard Lutnick and Elon Musk are probably becoming aware that, too much sort of tightening here and expense reduction is actually going to tank GDP. And so if we just kind of remove that from the equation, it's going to be fine. But guess what? It's not. Even if you change the equation, that doesn't change the fact that a lot of extra money is no longer being sent out into the economy. And so while the whole idea of these efficiency, expense cuts is to reduce the deficit, the risk is that it would have the absolute opposite effect. Because if you take all this spending out of the economy, you lower growth. If you lower growth, stocks and other assets tend to sell off and do worse. As has long been demonstrated, stock prices really are a critical marginal driver of spend and consumption in the US economy. So stocks down, spending down, therefore tax receipts also come down. And so the deficit can actually widen, not compress. So that's another whole dynamic. Furthermore, speaking about tanking GDP, the Atlanta Fed now, this is like their kind of real-time GDP tracker for real GDP, absolutely tanked. So this is their Q1 2025 estimate, where you had it quite positive. I mean, as recently as like a week ago, 2 and some change percent, although that was, I think, revalued a little bit lower. But in any case, in basically the last week, you've had it go from a substantially positive number to an overwhelmingly negative number. Now, to be fair, a good chunk of that is actually an increase in imports prior to the tariffs being put in place. Because keep in mind, net exports is one of the components of GDP. So if your net exports is going down because you're importing more stuff, then GDP will go down. So that's a big part of the reason there. But it also, I think, is speaking to, and Luke spoke to this very well in his most recent weekly report, of a number of signs of weakness all across the economy. You had January inflation numbers that came in hotter than expected. And so that kind of makes it difficult for the Federal Reserve to further lower rates, which can encourage liquidity, at least in some ways, via the banking system. Additionally, the reverse repo facility, as we can see, is basically fully drawn down. I won't go into the technical nature of the reverse repo facility. In summary, it became a facility to absorb a lot of the kind of extra cash that was quite literally printed during the sort of COVID era. And it was used as a offset as interest rates were increased. Remember, everyone was like, wow, we're so shocked that the rapid rise in US interest rates didn't tank the economy. The economy seems surprisingly resilient. right? We saw headline after headline of that. Part of the reason was that you had this reverse repo facility getting drained and that liquidity re-entering the economy to cushion the blow from the rising interest rates. Now that that's been drained, yet another lever at injecting liquidity has been taken off the table. This video is made possible by Bitcoin trading cards, and I am pumped to have them as the first sponsor on my channel. I met Aladdin and the team back at Pacific Bitcoin 2022, and I'm not gonna lie, at the time I thought, okay, cool, a quirky little Bitcoin project, but little could I have imagined at the time how this project would capture imaginations. I've personally used these to orange pill people that I care about in my life. The art is stunning and features Bitcoin artists all around the world. You get high quality Bitcoin education on topics like economics and freedom as part of that, which makes this, as you can imagine, a really special project for me. And I'm not gonna lie, it makes you want to collect these. The community behind this is also truly insane. And I think they have a real shot at bringing Bitcoin to the mainstream. So if you're curious to check them out, head over to btc-tc.com where you can find the different series they've launched. And hey, if you do end up snagging some cards, you'll also get some Bitcoin rewards back on your purchase, powered by Jolts. Here's to ripping packs and stacking sats. Lastly, the Trump administration about a week ago shared its sort of America First investment policy. In it are a number of really quite interesting policies which essentially serve to discourage Chinese ownership of US assets like stocks, companies, etc. And so this is basically the Trump administration saying, you know, trying to take your money out of our markets. So that's going to provide yet more pressure on assets. So you have this whole cocktail of like negative for liquidity things that are all kind of happening concurrently. And so it is no wonder that we are seeing the selling pressure that we have. Now, more medium term, I think the picture could be way different, right? More medium term, what is starting to unfold is a redesign of the post-1971 US dollar reserve sort of status. And I don't necessarily mean the dollar losing its reserve status, but some sort of restructuring appears to increasingly be necessary in the eyes of the current US administration. So namely, how do we weaken the dollar? How do we devalue the dollar? Similar to what was done in the Plaza Accord back in the mid-80s. It has become a literal national security issue wherein the sort of perma demand for the dollar keeps it artificially strong, making US exports uncompetitive. So you have this hollowing out of the manufacturing base, which occurs over decades. You have a lot of angry people who, you know, lost their jobs as a result of that. And you end up shipping your manufacturing overseas. And guess what? China became the world's factory. And now the US is dependent on China for so many things, including even some of the weapons that we would purport to use against them if, you know, a military conflict were to arise. So like this is a humongous issue. It's given the US immense privilege in some ways, but that privilege is now being, I think, more than offset by some of the downsides. And so there quite literally now is talk of this Mar-a-Lago Accord, hearkening back to the Plaza Accord of the mid-80s. And Zoltan Pozsar has been writing about this since last summer in terms of mechanically how it could work, where you basically kind of strong arm your debt holders into accepting these century bonds, and you establish swap lines so that they could redeem, you know, those bonds for coupon value at any time. So there's a number of like mechanics on how this could work. But it's basically the US trying to de facto restructure this global arrangement where, hey, we're going to like export dollars to the world and you're going to recycle those dollars back into US dollar denominated assets, whether that's treasuries, stocks, etc. So assuming some flavor of that does indeed unfold, and I think it will need to unfold depending on how long we see some of this more near-term pressure and strain. So make no mistake, everything that we discussed in that first section about all the liquidity stuff, the degree to which that continues is going to pull forward this kind of inevitable restructuring, re-injection of liquidity somehow, which at that point is going to be nitros for Bitcoin. But until we get there, we may continue to see a lot of volatility. But for historical perspective, and for those of you that might be a little bit newer and you're kind of nervous, this is your first cycle and you're looking at this big correction, you're like, oh my gosh, what's going on? Keep in mind, this is far from out of the ordinary, even notwithstanding all the kind of negative, liquidity variables that we just discussed. As Matthew kind of outlines here were some of the drawdowns or corrections in the run-up of 2017, 41%, 38%, 29, 34, blah, 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 blah. And some of the corrections in the run-up in the last cycle in 2021. You can see some, 30%, you can see 31%, you can see a whopping 55%. So what we're observing currently, at least, is very much in the realm of what we've observed for a variety of reasons in historical cycles. So I would not be getting concerned at this point. And on a more kind of technical level, which I don't really spend a lot of time thinking about, but keep in mind we sort of teleported all the way through, the 80s. Like there just was not a lot of Bitcoin trading hands in that range. And so you tend to have a gravitation back to that to sort of retest some of these levels, right? And keep in mind as well that market makers are usually pushing price towards the path of max pain, i.e. liquidation. So if a bunch of people are super leveraged long, market makers are going to push that price short to liquidate those, and they can make a profit on that move. Vice versa, if a bunch of people are, leveraged short and they're shorting Bitcoin, market makers are going to push the price upward to liquidate those folks. And it's just part of the business, right? Nothing personal, but it's just part of how this works. So in summary, in the very near term, I think we could continue to see a lot of volatility. Today, Monday, was a testament to that. Trump, your announcement didn't mean a thing over the weekend. Market does not care today. It is far more concerned about all these other things. But in the more medium term, and when I say that, I mean like still this year, I think all of that is going to turn into a tailwind when inevitably we see either some new QE type program, some new liquidity being injected, some perhaps grander restructuring, at least the early stages of that. I think all of that is going to be hyper bullish for Bitcoin. So I still expect we go a fair bit higher. I predicted at the start of this year that we would go as high as 200K this cycle. I still believe that to be true. And I think that will happen this year in 2025. But curious to hear, what are your thoughts on everything that we've covered so far? Let me know in the comments down below. The final piece of news that I wanted to touch on is changing gears significantly, but it's towards this eye of, is there potentially consensus forming about the next major update and upgrade to the Bitcoin protocol itself? Jeremy Rubin here has posted his perspective, which is that CTV, check template verify, and CSFS, check sig from stack. He says it seems clear that a combination of those things is the next upgrade to Bitcoin, with a path towards also other things like OpCat and some other pieces here. So it is pretty interesting to see like the chatter and discussion has really, I think, launched forward over the last couple weeks. I recently did a video on kind of the consensus building process at a more meta level, like what are the different stakeholder groups, what degree of influence do they have, how does consensus emerge from this sort of give and take process across all these different stakeholders. So fascinating to see. But I think this is pretty interesting. So definitely be sure you're subscribed. I will be covering these technologies in a lot more detail. In fact, I did a video on CTV a long time ago. As per Bitcoin's kind of slow and cautious pace of development, some of these things have been, in discussion for years now. But it's pretty exciting. I think CTV and enabling this kind of covenant-like functionality is unambiguously at this point a helpful thing, particularly for a lot of things I think about at Jolts with Lightning and Taproot assets and all these things that we're building. CTV would help in a big way in terms of scalability, not just of payments, which is what Lightning is very, very good at already, but in terms of UTXO ownership as well. So really, really important. Stay tuned for all of that. But with all that, we'll go ahead and leave things here. I hope you found this valuable and insightful. If you did, you already know what to do. Give this video a like. Use the share feature underneath this video. That really does help get this to a broader audience. And if you were so enamored with this content, you want to donate to a pleb, which really does help me continue to make these videos, you can do so in a number of ways. There's the YouTube Super Thanks feature built directly into YouTube, or my preference, you can zip some sats my way over the Lightning Network to my Lightning address, ragermajor@getalby.com. And if you want to get in touch with me, I'm now working with a number of folks one-on-one on all sorts of topics, from Bitcoin security and self-custody to running a Bitcoin node, different ways to integrate Bitcoin payments for a business, some of what my company Jolts does. You can reach out to me on Vida at vida.io/Ian Major. But with all that, we'll go ahead and leave things here. As a reminder, every sat counts, especially when there's fear in the air and blood in the street. And until next time, my friends, I'll see you then.